I wanted to take a moment to share with you the software we use for a lot of our clients and how we help them get organized, plan for retirement, and just get everything into one centralized location. So we use some unique software called eMoney, and this is a sample client of Joe and Susie Johnson. So they have a net worth of around $13 million, and they have a little less than $3 million in investments. This is their overall eMoney plan that shows their assets and their liabilities. They've got a little over $300,000 in cash. And if you want to link any of these accounts to have real time dynamic numbers, you can do so. Whether it's Bank of America, Bank of Tampa, Charles Schwab, or any kind of accounts that you have out there, more than likely you'll be able to link them to the accounts so we can see real time numbers. Well, Joe and Susie in this example are very fortunate. They don't have any credit cards. They do have some taxable investments in their brokerage account. They've got some 401ks. They've got some value in their life insurance. They have some loans out there. They've got property. Joe owns a business worth $6 million. Susie has a business with some value to it. They got a primary home, a vacation home. We can attach those to Zillow to give you Z estimates or whatever they use for their evaluation. If you have any protection or fundamental planning, we'll see all that here for life insurance, disability income, long term care. They even have a vault. So if you have your estate planning documents, you can put it into your digital vault. So if something happened to Joe, Susie knows where to go and vice versa. And you can collaborate with Taylor Financial and the team here. The organizer will really help just to make sure everything's in one location. So there's Joe, there's Susie. They got three beautiful kids, Tyler, Emily, and Billy, again, all made up. And they have a business, a few homes. And again, you can just attach these pictures and just help get organized. Over here, you'll see all of the accounts that I mentioned, as well as any professional contacts, what your income could be now and what it may be next year, and overall expenses and savings. So getting a good baseline, and then future goals. I think in this example, Joe and Susie are going to celebrate their 25-year wedding anniversary, and they want to have some money earmarked for a trip to Greece. Fantastic. Billy's going to Florida State University, the best college in the nation, in a few years, and they need to plan for that financially. So this is what your dashboard will look like. You do have budgeting tools. You have a lot of other things that I don't see directly, but again, it helps to aggregate all your accounts, to get organized, and to make sure that it's all in one centralized location. I'll share as the screen goes off, I'll share what it looks like on our side any moment now. But this goes into some of the goals. So the main goal was for Joe and Susie to retire at the age of 60, living off of $240,000 a year. And then there's the money earmarked for the wedding anniversary to Greece, and then Billy's education. The net worth is talking about all their assets and liabilities, which we just went over a moment ago. And then we can update their income if it's a W 2 or distribution from the business. What does that look like? And then, really, where are they saving money? In this example, Joe and Susie are maxing out their own 401k, and their employer, being them, are matching as well. They're also putting in $3,000 a month into their brokerage account with Taylor Financial. And then if we say, how are we tracking for some of your goals? Let's talk about maybe their retirement goals. And we can share with them, and I'll turn all these toggles off and turn them back on. But if we look at what they're doing right now, just with what they're saving in their 401k and in their non qualified account, they run out of money pretty soon, actually, age 75. This is them living off of, I believe it was 200,000 a year at age 60. If we want to look at what does it feel to live off of $20,000 a month, or I guess it's 240 versus $25,000 a month. Okay, well, they run out of money at 20, so they're actually going to run out of money at 25,000. But what if they push back their retirement 2 years? So from 60 to 62. Well, that changes things quite a bit. And actually, if we go back to their baseline goal of 20,000 a month, it's not too bad. They actually have assets and portfolios that last until the age of 88. And you can see the declining of investments that we're using to help maintain that lifestyle. And then this axis, of course, is their overall age. We have plans to go out to the age of 95, which may seem crazy, but people are living longer nowadays. So we'd rather you not run out of money at an early age. So we do plan until age 95. But if we make some small changes, just like adding $2,000 more a month to your brokerage account, what does that do? Well, that helps a little bit, takes assets out from 88 to 91. And then if we just move some of the savings in money market, where they had about $300,000 in non interest bearing savings, and just move it to a money market that is getting decent yield now, at least, well, now all of a sudden your assets last until age 95. That's not really doing too much different than what they're doing now. Now they both have businesses, so they may gift their business or a portion of it to their kids or legacy, or they may sell it. And if they do sell it, there's a value associated there. So let's say Joe sells a business for $3 million, which is not much compared to what it's worth in today's dollars, but that checks the box a lot for retirement purposes. So now we can decide to be retired sooner or have that financial independence, or to potentially live on more money on a monthly or annual basis. 25,000 a month still looks pretty doable. If we go to $30,000 a month, still pretty healthy. Lives assets go until age 86, which is nice. So maybe Joe says, "Hey, if I sell it for 5 million, how are Susie and I going to be from a financial standpoint?" So selling for 5 million, 30,000, very high probability we're not going to run out of money, which is fantastic. If we look at $35,000 a month, okay, 92. So these are great tools, not only again for organization, but for certain purposes of selling a business or retiring sooner or deciding how much can you live off of. What if they want to purchase investment real estate or maybe even sell their vacation home? Those impacts can change your distribution quite a bit. There's also a lot of what ifs here. What if a client has a long term care event? How does that affect the plan? What if a disability happens? What if we have some phenomenal growth years in the market? What if we have some poor years? What about inflation? If inflation goes to 5% in this example, that changes the plan tremendously. So there's all these what ifs that we want to review with our clients, and we believe it's imperative to have these dynamic, these regular meetings with clients to update the plan. But I think it is nice to show them, hey, there's a good probability of success for you and your spouse to live off of X amount of dollars for these years. So all of our clients at Taylor Financial get these. This is invite only, and it's a great way to make sure that you're collaborating with a team and with the clients to aim toward the goal that is important for everybody. Hope this helps. And again, taylorfinancial.com client portal is how you log into eMoney once you get an invite from us. See you soon.